Today we made a discovery on this show over time. We've had plenty of insights around this idea that JWB is perfect for first-time investors, but for whatever reason, we get a lot of second-time investors. Mm-hmm. We get those second-time investors because first-time investors sometimes don't know the order of operations. Sometimes they make the typical kind of like mistakes that people make when they buy their first property, and then they realize the right way to buy it. So we're going to focus in on what those missteps are, what the keys to success are, how to improve your real estate journey when it doesn't go perfectly well the first time. Welcome everybody to the weekly edition of the Not Your Average Investor Show. I'm your host, Pablo Gonzalez. Today with me, we don't have Greg Cohen, but instead we're upgrading. We've got Allie King with us. And Allie, is this your third time on the show? Fourth time on the show?
Third, I think. Third time on the show. Second this year. I know that for sure.
Returning star. What is your title these days? I feel like you're always getting promoted.
I am the manager of our Portfolio Management Department.
Manager of Portfolio Management Department. Basically, Allie, you're an OG here at JWB, and you've been here for a while, and you've kind of like moved up the ranks, and now you are managing the Portfolio Management Department.
7.5 years now, so working towards 10.
Allie, I feel like you have a superpower in kind of like remembering everybody that's been through the system as portfolio manager. Just give a little background of kind of like your oversight into the portfolio management and the role, and kind of like how much access you have to clients these days.
Oh, yeah. Okay. So set you up there. Perfect. Check. I've been with JWB 7.5 years. I actually started as a client relations coordinator, so hand on hand with everything. I've kind of balanced in a handful of different roles where I played on the closing coordinator side. That's when someone went under contract, working through with your lender and your title company, insurance, all of that, making sure and connecting all of those dots, portfolio expansion, playing on our property management side. So clients who maybe didn't buy homes from us, but were looking for property management, played a hand in that. A little bit with the multifamily world, grew up the ladder a little bit there. So now I'm a couple levels removed from direct communication, but as several names in this show know, we still talk on a regular basis. So a lot of what I really focus on is just the trying to keep the connection. I always want to make sure that we're checking in on what's going on, because my thing is, I don't know what I don't know. So that's kind of number one priority for me is what's going on? What is it that you're not telling me? Maybe because if 90% of things are going swell, but what's that 10% that we can really nail? That's what I'm always looking to focus on. Where can we push the needle and grow?
I love that. And that really explains, what I've noticed about you is that you were like the most active person from JWB inside the WhatsApp group community, right? Like you're kind of like the MVP from the JWB side in that community. And as I think about your role and I think about how you've been super attached to the client, and now you're kind of like a couple level removes from it, I love the idea. Like, I now see it in a completely different light. At first I was just like, Allie's super gregarious and she's cool and she likes to hang, which is also true. But like the idea of like being really tied to the actual word on the street of the client when you're a manager and you got a couple layers in between.
It's important.
Yeah, great strategy. All right. So let's talk about this idea of Allie is the MVP of the WhatsApp. MVP Leah saying that about you. So that's cool.
Wow.
That's cool.
Highest compliment.
Awesome. HT. Oh, and we see Tony D's in the house. Tony, good to have you here, buddy. Checking in from the cell phone. Anthony Dida. Tony D.
Yes, I'm here. I got that one.
Just check it.
I didn't know if we had a dance for it.
Yeah. No.
We can work on it.
All right, cool. So that being said, we've picked up on this kind of like narrative in the show, right? Because what we realize is just basically having people on as guest investors over and over. We've done a deep dive, right? Joanna, our community manager, has gone into past 5 shows where we hear 5 different people that have come to JWB not as their first investment, but as like kind of like their next step in their investing journey after learning a couple lessons. So I want to go through these stories and just kind of pick your brain about how normal that is and kind of like how you see that. So we're going to start with the Maven. Leslie Wilson, the world famous maven.
Perfect.
Leslie began her real estate journey. These are all from past shows. So Leslie, you can correct me if we didn't get this right. But Leslie began her real estate journey kind of like an accidental landlord in Phoenix. She has a friend. She was able to take over a house in Phoenix and started trying to self-manage that remotely from Denver. Wasn't having a very good experience. Decided to like move it to, move the investment to Denver to self-manage because she didn't think that self-management was doable remotely. And she went through all that before finding JWB, right? So like at the end of the day, she's told us that she then spent a lot of time watching the show, making sure that we were legit and vetting us and having the turnkey thing. And now she's like super into the tax strategy side of it. But first, let's start with the pains first. Like how common is this idea of somebody that stumbles into a property, or not stumbles, but like has the opportunity to take over a property?
Pretty common, especially in like that friend and family world of whether it's this isn't working out for me, I need a favor and someone can kind of swoop in and save, or if it's this is being passed along. So people land in it in a handful of different ways, but a lot of the times it is this fell in my lap. What do I do with it now?
Yeah. And as I'm thinking of that, right, like it reminds me of this idea that most of us think of. We talk about this idea that people spend all their time looking for a property. They kind of like don't think very much about the market, and then they spend 5 minutes in Craigslist looking for a property manager or Google or something like that. And it's probably, when I try to talk about like looking at the market, I often wonder if that's even in people's order of operations. It's usually just property, and the market is circumstantial. Either a friend gives it to them, they have an opportunity, or they just assume it has to be within driving distance because they want to self-manage. Is that something that you see a lot?
Oh, yeah, for sure. Especially if it's something like, and sometimes it's even just because it's your neighbor. It's a house that you've been to. So people are like, oh, I have to move, or I can no longer keep up with this, or I'm moving to take care of a parent in a different state, but would you like this house? So sometimes it's going to be a convenience sake because it's there. More rare and I guess more risky is if you're taking it over to self-manage in a market that you're not in, because that's just hard for anybody. And especially adding on the layer that you might not even know that market. You might look at the numbers and the house and, oh, it's established and we can find a renter. This shouldn't be too hard. What really is there to do other than collect rent? But there's so much more that goes into it, and that can set people kind of up for failure from the beginning. If you don't even know what questions to ask about the market, you're probably more asking property specific questions, which is good normally for a couple of months, maybe even a couple of years. But when it comes to making changes or big capital improvements or a vacancy, that's when really all those other factors are going to show up.
What are good questions? Let's say I do have the opportunity to take over a property either in my backyard or somewhere else. What would you advise folks ask about the market that you're saying are better questions to be on the property?
Yeah, I think if it's out different questions, I think, depending on if it is accessible in your backyard or not. I think if it's a distant property, I would start interviewing property management companies first, and then looking for communities, something like this, where I can get connected with people who do already know what's going on. But I think a lot of it is also going to be tied to what your plan is. Am I saying like, okay, I want to get into this and I want to hold it for a couple of years? Is what you're buying it for going to be able to support that plan? What does the appreciation rate in that market look like? How much money are you putting into it? What are rates? Kind of how are you even getting your capital to begin with? And reverse engineering. If you have no plan, that's almost better because you can say, okay, well, maybe I have no intentions of what to do with this. I just know that there's an opportunity and I'm comfortable holding it long term. That's going to give you a lot more wiggle room, but I still want to look at all of the other things. Kind of what are the expenses here? What are these neighborhoods known for doing? Who's moving here? Are people moving here? Are they moving away from here? Kind of just what's the desirability of the area altogether?
I like it. So Leslie is saying a common mistake is thinking that real estate is all the same in every location.
Huge. Yeah.
Right.
Yeah, exactly. Because you can say, oh, we even see that a lot here where we have some of our very active, successful clients want to diversify. And by doing so, Some people think that they have to go to other markets to diversify, and that can happen to them in that world. We've had that happen plenty of times too, where they are current clients of ours first, also have an opportunity somewhere else, learn it doesn't function quite the same if you don't have our team there, and then maybe end up 1030 wanting that back into our world or asking for advice in this community, but trying to figure out how to match this process everywhere.
I mean, this is the quintessential, I mean, this is the idea that we talk a lot about of the order of operations being backwards coming to life here.
Yeah.
Right? Like we talk, like I said, we talk about people like they either focus all the time on the property or they happen to have an opportunity with the property. The market itself is a secondary consideration, is just kind of a given. And then spend a little bit of time looking for a property management company and go, when what we talk about a lot is team first, right? Go figure out where the teams are that can match the experience that you want to have. Understand the market that they're in, the questions that you were just saying, right? Like, is this a growth market? Are people moving here? How stable is it, right? Like I was just looking at this report about how Port Charlotte, Florida has the lowest, the biggest drop in home prices. And of course, these little towns that have less than 1 million inhabitants that are built off of like like a construction economy tend to have much bigger swings than a city with 1.5 million inhabitants, multiple Fortune 500 employers, logistics centers. Right. I'm obviously describing Jacksonville, right? But like the makeup of the economy there and how stable that is, whether it's growing, what the median income is there, will that support where rents are going, like the housing supply mix, right? Like we've just seen the effects of multifamily and single family home intersecting,
huge.
and all those kinds of things, right? Like figuring those pieces out, and then the property just kind of becomes easy if you have the right partner.
Right. Yeah. It's almost the least important piece of the puzzle. And even though there's not going to be a crystal ball in any market, there's always going to be history. And that's what I would always rely on, is what has happened here historically. And then how can I use that to plan for the future?
Yeah. And that reminds me of like another thing that we talk about of like when you are looking for the team, where are they getting their data from?
Yes.
Right? Like, is the data something that they just chat GPT'd? Is it something that they're paying like a high class service for? Or is it proprietary data of performance that they have been doing for 10, 20 years? And can they say, this is what our client population, how it's performed, and therefore you should be pretty comfortable that we can make another house that looks exactly like it's in the same neighborhood with the same contractors perform.
Yeah, fact check everything. Yeah, where do your numbers come from? A lot of people, and that's a big thing, even just with articles that are pulled, don't just go with the first one. Look at several articles if that's how you're doing your research from something out of town. Is okay, I can see that, but does it completely contradict this article? Then there's probably something you're missing, and that's just more questions to ask.
Yep. Okay. And then, tapping into kind of what she said, she then used to like figure out to come to JWB. And she's saying in the chat, Leslie's saying if she had a penny for every time that somebody asked if JWB does business in another market, she'd be a rich person, right? But, and by the way, this is something I'm going to go ahead and just like toot my own horn here, but you see a lot of common things here of like how they figured out to come here. A lot of them talk about tuning into this show and watching that we show up consistently and the data that we show on this show, and that being like a major indicator. So that was one of the things that she talked about, having learned the hard way, understanding that the true turnkey experience and being truly passive was something that was important to Leslie. She has talked multiple times about how she loves being super tax savvy and having a team that can like nerd out with that honor with her, like JWB does, is important. And then of course the community and the transparency and meeting everybody else is something that's pretty unique here, right?
Huge. And I think turnkey there is a huge piece of it too, because it's not the only way, but it's definitely a different way of purchasing a product, where turnkey versus a product that you're finding elsewhere. Turnkey is a product that's ready for immediate use. It's not saying that this is a guarantee that nothing will ever happen ever, but it's saying, I know a lot more. And so then when something does happen, I can at least give you a solution on how to fix it. So it's a little bit more of not ever saying that it's going to be perfect, but of how we're going to get it back to the right spot for your numbers, because we are able to look at the numbers from the beginning to where with a different product, you're not able to look at it from the beginning. I think
I'm glad you brought up turnkey because that's a perfect segue into our next story.
Okay, perfect.
Look, fourth time on the show. You're a pro here, Allie.
Clearly.
The next story we're going to talk about is Jag. Milady Jag Chatta.
Is Jag in here?
I haven't seen Jag in a couple of weeks, so hopefully somebody forwards her this episode, right? But she began her investing journey overseas. She was living in India, watching the Not Your Average Investor show. She was motivated to sell her New York co-op and then diversify that into multiple markets. She looked at multiple turnkey providers to have this diversified strategy to do a 1031 in different places. And what she realized was that not all turnkey providers are built the same. And particularly one of them had created this timeline saying that this is going to be ready in 2 weeks. So then you're going to be able to like divest into here. And then it wasn't ready in 2 weeks. And then it missed the 1031 deadline. And she had to take the giant tax hit because you can't really do anything because 1031s are strict like that. And, that was a big pain for her. So when she finally, kind of like when she learned that lesson, that's when she was just like, all right, it's less important to diversify as much as having a true 1031 partner and somebody that can like bring these properties to light. But I'll stop there before we get too far down the path. People that have a bad 1031 experience. Talk to me about that.
It's tough. It is. The process itself is not tough if you are just leaning on people. And that's where I would say find the right people who know what they're doing and have a track record of doing it well and let them do it. And then you can have a completely passive experience. If you are trying to do it completely on your own and are identifying companies, it's just very strict. You have to hit your really particular dollar amounts and the timelines are not up for negotiation. So like when the clock starts, there's no stopping it. You can't pause it. You can't turn it around. The clock starts, you're going, and boom, you have to find that exact puzzle piece within that certain amount of time. So I think the biggest issue that I see with people having 1031 horror stories is people who do not have enough product to choose from. So if you're going somewhere and they say, oh yeah, we have some that should fit. Well, what if those sell before your timeline starts and now you don't have those same options and now you're trying to figure it out? Or in Jag's situation of really banking on a new construction or a renovated product being available by your timeline, that's probably a risk that I would recommend nobody ever take, is banking on a product that is not already ready for sale, even factoring that into your timeline. Super risky. Love if it works out for you, but I think the primary thing is going with a company who has a really good relationship with your 1031 provider. That's going to help a lot too, because communication breakdown, that could be the issue from the beginning, even if your inventory options are perfect. So those are the two big things is, do you have a turnkey provider who can communicate really well with your 1031 provider? And do you have ample inventory to choose from so that if stuff swaps around, people buy your one before you're able to secure it, that it's not even an issue. You know that there are several options to choose from.
Let's dive into that. I want to rewind a second.
Okay.
Anybody that isn't super familiar with a 1031, right? It is a way to take an asset and exchange it for another asset and defer the taxes from the capital appreciation, AKA you buy a $100,000 thing in New York, 10 years later, it's $1 million. Being able to use that extra $900,000 in appreciation and reinvest it without paying taxes to start makes a really, really big difference on what you can reinvest. And in order to do that, there's certain timelines to hit. I believe you need to identify a property before you sell. And then once you sell, you have a certain amount of time to go to like buy that actual property. Is that kind of it?
Yeah. In a nutshell. Yeah.
So that's it in a nutshell,
Yeah.
right? So what happened specifically here was Jag had identified a property. It didn't end up meeting the timeline, and they didn't have one coming, she didn't have like an alternative property picked out. And that could have been an education gap, or it could have been a believing what you hear and believing that, like they're really going to make this time. So this really comes fundamentally to this like topic that we talk about, where there is fake turnkey and real turnkey out here. And some turnkey companies are basically telling you like they don't own the asset that they're selling you, right?
Also,
You want to talk about that?
Yeah, so if they could be kind of playing the wholesaler mix of the kind of the representative of like, okay, I know what you're looking for. I'm pretty sure that I can find it for you and almost the matchmaker, which is different. Or they could just be acquiring the properties themselves and flipping ownership, maybe having a temporary ownership versus just really knowing the product.
Yep.
Or it could be in the world where maybe they, in this situation, I'm curious if it truly was them not having a really good understanding of 1031 and those deadlines. And so for them, they could say, they just might not be taking the timeline seriously of like, oh yeah, you really want it by the 4th of July. Like we should be able to get there versus and no, it's not that I just really want it. It's that I have to have it in order to make this deal work. And so it could just be a lack of experience dealing with those sort of deadlines and timelines and then not communicating it properly.
Yeah. Versus the, what we keep saying that like real turnkey is that you're not buying the property on a promise. You're buying a property that is already finished, has a renter in it, and is owned by the person selling it to you before you even step into this.
Exactly.
Right?
Yeah.
And that's what JWB does, and that's what you want to be looking for in a true turnkey provider. And that will definitely mitigate the risk of missing this timeline, right? This like cleanliness of having it all ready to go before you're signing a piece of paper and identifying this is one piece of it. But then there's another piece of it. Like Leslie says here, the key is to identify lots of options during the 45-day window of the 1031. You have 6 months to close on one of them. So give yourself lots of choices. And a lot of turnkey operators, even if they're doing it right, they're just not operating at the scale where they can give you a whole bunch of choices the way that JWB does, because JWB has figured out how to build to rent and into lots, plus acquire properties, and they just have this like conveyor belt of properties that they always have.
Yeah, exactly. And we are confident in the product and we're confident in our ability to reproduce the product, I think is the biggest thing.
That's the biggest thing.
Yeah.
That's the biggest thing. It's like the widgetization of it that makes a like asset, feel so similar, even though, as we all know, homes and residents are infinitely different.
Yeah. Yes. 100%.
Yeah. So we're going to hit a little bit on that some more, but that being said, right? So then Jag, what she realized was she has watched this show for a bunch. She realized that that they could trust us. She learned this whole like team first approach. And learned kind of like the nuances of this like seamless 1031 exchange execution. She calls it her MBA. Her unofficial real estate MBA. So now Jag is a client, of course, and a member of the community.
And I think a side piece too is when you're when we talk about working backwards is, can I go ahead and find a turnkey company who maybe already has a relationship with an intermediary, a 1031 intermediary? And if you do that, start there. Like, let's go ahead and have those conversations, because if you already found a company that already has that relationship, the odds of their track record in successfully executing that is probably a lot higher than someone that doesn't even have a referral for it.
How many times have you done this thing with the same person?
Yeah, exactly. Yeah, right. Yeah. We've checked
That's a great question.
Yeah.
Right. Kemeline has a question. How long does it take to complete a 1031 exchange if all the homes are under the JWB umbrella?
If all the homes, so if you're
only 1031 exchanging to JWB, I think. Is that what you're asking, Ken? Or are you asking of like 1031ing from a JWB property to another one?
That's kind of how I interpreted it, which don't do that. But there are reasons that we actually get asked that question a lot, where some people will come up and say, hey, I have this home that I bought 6 years ago with JWB. I'm interested in 1031ing it into a new construction with JWB, maybe into a 2025. Yeah, so that could be the question, or maybe we're just getting sidetracked now.
Why don't we talk?
But yeah, I think it's a good thing to sidetrack. I'd say 99% of the time, that does not make sense when you're looking at the numbers, is because it can feel as, oh, well, I'm getting rid of this one before some major capital expenses come up is normally the mindset. So before I need a new HVAC or before I need a new roof, let me go ahead and exchange it for this new one. But what my team will do, and I always lean on you to ask, that is number one, always lean into your portfolio manager and ask the question. Normally, we're going to look at it every single time. It's not going to be a blanket answer, but I'm going to break it down and say, okay, well, let's look at the numbers. How much was your home then? What is your mortgage balance on it if you have one? What were your rates when you bought it 6 years ago? And let's just look at math. So let me put in all of the expected items and let's just plan for it and see what it looks like versus what it would look like to buy at today's numbers, at today's rates or everything. Because as we know, we are in an appreciating market here.
Yep.
So it normally does not make sense. Normally, if you talk to anyone who's buying now, they say, I wish I bought 10 years ago. It's always that I wish I bought them sooner. So I get where the logic is of trying to get an updated product, but you're kind of just starting it over. And then you're also starting over with your appreciation clock. So all of that money and that equity that you just made, you're selling it, you're cashing out, but now you're starting at ground zero. So it's just planning, lean on your team and look at the numbers and just really avoid any emotional decisions and any feelings that might come with putting money into a house. Just look at it. Let's kind of do facts over feelings and see what the numbers say.
Got it. Ken is saying, thanks, the home to sell is free of a mortgage. So I think he is talking about that.
Yeah.
Right.
So it's.
Yeah. So I think what you just illustrated is the value of a team that really knows about 1031 exchanges and other financial engineerings. I would assume that, if you are looking at it for the reasons that you said, that is, it might be a feelings thing like, oh, I've just heard you sell the property before you replace the roof or whatever. So that's one way to do it. You can talk about dollars and cents. Does that make sense? The other might be, I don't really want to take money out of pocket to do this repair, or maybe I don't have money out of pocket to put in this repair, right? Like I would assume at that point you're gonna look at, well, what if we cash out refi?
Yeah.
Right. Like,
what are our options to tap into our equity to use that and compare them all? Like look at all of the options and just compare them to get to see, but you're still selling it on the open market if you were to do it that way. So you're still going to be listing the home, even if you're listing with JWB Realty, we're still selling it on the open market. So whether it's occupied plays a big part in that, whether it's vacant is going to play a big part in those timelines. So truly just there's a lot of numbers to play with, but look at them all, zoom out and see what's going to make the most sense for you as an individual.
Got it.
And your goals.
Ken, sounds like you should book a call with your portfolio manager and go over it. Right?
You can really break down all the numbers.
Feels like a lot of options, right? Yeah. So thank you for illustrating what a team that knows what they're doing.
Try.
It sounds good. All right. So next person is the Mountain Man of Billy Green. He is Bill Green, crowd favorite here. He had a entry into real estate with a condo in Colorado that became more of a burden than an asset. Wasn't a nightmare property, but it gradually turned into a poor investment for a couple of reasons. There was a hidden cost drain, right? It came with a $500 a month HOA, which slowly eroded his equity over time, even as the market grew and high monthly expenses, stayed there. He had selling struggles. That unattractive HOA made it harder for him to sell it. And then at a certain point, even though he had invested in a high ticket education program, he just kind of felt stuck on what to do with it. How likely is this?
Likely it's depending on what you got into. Some people got into the property when the HOA was high and it made sense for a primary, but it doesn't make sense for an investment purpose. So when you're living in it, a lot of those numbers can make sense. Sometimes your HOAs are paying for parking spots that would otherwise be expensive, for lawn care that you'd pay for some of the maintenance, roofing, shared walls. And when you're living in it, it makes sense. But when you're not, it might not offset your numbers the same way. Anything 400, 500, I would place that in the high HOA category. But it's not that it's unjustifiable. It just normally does not make sense for investments when you're looking to make money off of it.
Tell me about kind of like the right way to look at HOAs when you're thinking about a rental property.
Yeah. So like we have a handful of properties that are in HOAs. It's not primarily in a lot of our products, but we're going to have a handful of townhomes where it makes sense because the HOA is really just minimal, taking care of your lawn maintenance, kind of your shared lawn, your common areas, roofs, and shared walls. And when we are making those buy-in decisions as a turnkey provider, we're doing the reverse engineering of the math. So we're going in and saying, okay, what is kind of your break even here for your HOA, taxes, mortgage, property taxes, mortgage, everything that's going to go into that, kind of putting those all into your expenses. And then what can you rent it for? What can you sell it for? And you play with all of the numbers. And it's rare in our world that we see that number really jump to something that we didn't expect. But I think back to that main thing is, if it ever does something that you didn't expect, what's the plan to get it back into place? And that's where I would really lean into, again, your team. And if you don't have a team, that's going to make it really tough. But knowing that, okay, hey, team, these numbers, this HOA was $100 when I bought it, and now it's $300. What are we going to do? The answer is not jacking up the rent, because that's market controlled. That's not your property management company controlled. So that's not going to be the answers. It's, okay, let's look at all of your income and all of your expenses and see where we can really play with it and say, maybe it's us reshopping insurance. That's a huge opportunity for people in Florida right now. Where can I reshop that and play with the rates? Where can I do this? And then, okay, where can we make the most of what the HOA also has to offer, and kind of just really play with the numbers there.
That's great advice for people that are in an HOA without a lot of control over the HOA.
Yeah.
I know that Lee, because he's the MVP, he's saying he knows of at least one situation where JWB is involved in the HOA. And I know that we've talked on the show about how, like, it's very likely that if you're in a property with an HOA with JWB, there's likely a critical mass of units that are owned by JWB, and they'll have somebody on the board of an HOA, and therefore the HOA is making investor-friendly decisions. You want to tell me a little bit about those?
Yeah, also that, I think that can kind of go into two-part, because we can be on a board, and that does not mean we get final say in all decisions, but we can have a hefty influence in some. But I think, a good point is, how can we make sure that an HOA is what it, in my head, should have been designed to be? It is a homeowners association. So instead of someone else coming in and telling you what to do, it is making decisions for the homeowners who it will benefit them the most. And so while it is spending dollars, it is to fix this thing that there's an issue that will then raise your home value. And that's kind of how the box that I'm going to look to check is this making it a better experience for the renter so that you can justify rents that make sense with a higher valued property? Or is this going to make an improvement that will allow me to sell this at a higher rate when the time is to sell?
Yeah. So I know that we've talked about it. Like, I know Greg's brought up examples like people thinking of like gates versus pools versus other kinds of things. Do you have any kind of like anecdotes of like what is generally a good thing for an HOA to invest in that actually raises values versus stuff that people do just because the neighbor has it or something like that?
Yeah, I think roofs is a big one that I see. So sometimes, especially, I'm thinking townhomes just because that's where we really play in this category. But that's a big one, is like when it's time for roofs, normally we like to do them, and HOAs like to do them in big chunks at a time. So like, I'm going to do these 12 on this street. And then when those are complete, then I'm going to do the 12 on the next street. And while that's going to cost money, that's huge. And it's not nearly as much money as it would cost for you to just replace your own roof on your own. So it does save you money at the end of the day and add a lot of value.
Got it. Makes sense. Okay. So then Billy Green, apart from coming on the show and getting one of the coolest nicknames around, one of the things he realized was, I mean, he was into this community that cares thing. Obviously, that's an ongoing thing. He really wanted a team that could do it all, right? Including preferred lenders, closing support, long-term strategy and guidance. He grew immense confidence in the Jacksonville market, something that we've talked about with the Leslie situation.
Yep.
And then on top of that, I know that he took advantage of like the execution level on the 1031 and a couple of like incentives that were happening at the time. And that's what made him kind of like overcome that initial thing.
Boom.
So there you go. All right. We've got two more here.
Okay.
Doug Siglia, not a very active member of the community. He is more of like what we call a lurker. He'll watch a show, but he is an entrepreneur. He's an architect. He's got he's got things to do. He's been on the show. His big first win was a lakeside property outside New York City that he bought cheap, renovated, over 2.5 years, typical architect move, right? My
It's
wife would
really
love to do
perfect.
something like
Yeah.
that. Yeah. And turned it into a high-performing Airbnb. But despite the strong income, property became a drain on his time and lifestyle as his architecture firm grew. The time-intensive piece as an entrepreneur was a lot for him, and then he started facing some regulatory headwinds in New York with the Airbnb market, and he just got kind of burned out with DIY investing. Let's hit on this idea of folks that come into real estate and jump into Airbnb and, kind of like burn their hand on the stove. Is that something you're seeing more and more these days?
It was something I was seeing a lot more of a couple years ago, where people were coming to me with their Airbnbs and saying, even just Jacksonville locals, of, hey, I had this as an Airbnb. It's not doing what I needed to do. Can I turn it into long-term rentals instead? And we say, yeah, bring it to me. But we look at the numbers too. I think the biggest thing in it is it's a lot more than people think that go into it.
A lot more work.
A lot more work that goes into it. And then even on the financial side, there's just a lot more under the hood than I think a lot of people know. And then there's not really at least even like when we played with Airbnbs, we learned a lot along the way. It's hard to have a like Airbnb for dummies. I'm sure that exists, but there's always, you're just finding out new stuff along the way.
Yeah.
So I think even from just an investment strategy point of going from short-term to long-term rental, that's going to change. I see it a lot less now of people bringing them, because I think people have just stopped investing in them as much. Yeah. And I think even just the popularity of Airbnbs has faded, in a personal opinion. I think it was a really, really hot thing for a while.
Yeah.
And now the pricing has kind of catered where it's more attractive as a renter to sometimes stay in a hotel, unless there's a very specific, like, I'm in the middle of a mountain, I'm in a tree house. If there's something super flashy, then it's attractive, but it's kind of, I think, lost its luster a little bit. So it's really now harder to predict who your guests are going to be as the owner.
Yeah. I chalk it up. So I don't have any operational experience in Airbnbs, right? I hear that over and over again. Like, the operational thing is harder. You might have that figured out. For me, what freaks me out at Airbnbs is it's investing in trends. Right.
Yeah.
Right. Like we had that show where basically, like, man, I am an elder millennial. I am the generation that, like, Airbnb was made for originally. And it was like, I remember, I keep telling people, because now I'm super hot on renting cars on Turo these days.
Okay. Yeah.
And I keep telling people, I'm like, dude, renting cars on Turo right now, it's like 2012 Airbnb.
Yeah.
Because when Airbnb first came out, you got like a better deal.
You did.
A better location for traveling. It was really competitive against hotels, and it really had this like community aspect and all this type of stuff.
Made a lot of sense.
Nowadays, it's like, because regulation has caught up to it, right? It's the pricing and the value that you get per thing, right? Like, I'll still look at an Airbnb if I'm traveling with like a big group of people.
That's it, yeah.
And we're splitting in it. But like, when I'm traveling solo, I'm generally going hotel, just because it's caught up to it, and there's just like less stuff, that I have to worry about, and it just makes things easy, right?
Yeah.
And it just felt like this big trend that, as it aged, it normalized, to use words that we use on the show often, it like normalized the cost, the value, benefit. And for, I think, people that are part of our community or part of the show that are thinking about investing for the long term and, really being able to build their future around something, investing in a trend, whether it's Airbnb or it's Pad Split or it's crypto or whatever, right? Like, these things that just haven't really aged out just seem like it has an extra bit of undefined risk. That seems like it's a thing that bit Doug.
Yeah, I think you nailed it. Yep, you crushed it.
We'll go there.
Yeah.
Yeah. Well, so Doug, when he saw it, he was listening to the show, right? He was obviously like getting a show that delivered more than content, is what he said. Doug had been listening for years. The education, transparency, and stories from other investors gave him conviction to move forward. That allowed him to trust the process. That allowed him to, he saw the value of this like passive growth versus an active hustle, as he realized that what he wanted to do is put his active hustle into his business.
Yeah.
Right, which is something that I can very much relate to. And then, of course, he loved the 1031 exchange readiness.
Yeah.
That's what made him come over and learn that one.
And I think we see that a lot with, even versus like Airbnb or not, people transitioning from active into passive. And that's something that we're able to offer. But a handful of people get into the game when they're active, and that's their thing, and they have the time and they have the resources, and that's what they're able to pour it into, and it works. And then it works until you have a highly successful architecture business that's popping off, or whatever it is, your next venture that you have. So being able to transition that of, okay, I love this product, it makes a lot of sense. I just can't be point man for it anymore. Who can I trust to do it? Who can do it better than I could? I think is a really tough question to ask and a really tough answer to find, but who can do it not even as well as I could, but better than I could.
Perfect transition once again to our final point. But first, I want to answer Linda Evans's questions because she was talking about she put it while we were talking about HOAs.
Okay.
Linda says, would you recommend more than 2 properties per building for future maintenance issues such as roofs? I assume that she was talking about what you were talking about with like roof
Like if you
replacements
have
and
to
HOAs.
do them.
Yeah.
I don't think it specifically matters building by building if you're in a community, because most of those decisions are going to be based off of age of the unit. So I would more look at that. So if you're buying an '08 over here versus an '08 over there, they're going to be pretty similar. But if you have and like an '08, it's not going to be attached to a 2014. So they're going to be, the decisions are going to be relatively the same just based off of the age.
Got it. Makes sense. All right. So now back to your perfect transition of going from active to passive. We have our last example, the beloved patron Santorios of the Natural Average Investor community, Michael Santorios, super sharp guy.
Yeah.
You know, he didn't get scammed. He just got tired. Right? Like he bought his first rental property at 21, built up a small portfolio near his home in Maryland, and what looked like a win on paper started to like become like this like time-sucking burden. He was feeling the self-management overload. He was handling everything himself, tenant calls, contractor wrangling, lease renewals, all that stuff that was, you know, almost like while juggling his W-2 job, had a couple of condo fees, started experiencing delayed progress. Even with that, he built a nice little portfolio.
It's incredible.
And then he also started feeling the pinch of an anti-landlord municipality, Maryland, that he talks about all the time here. How common is that? How common is this idea? Like it feels like we are right now on the beginning of this wave of anti-landlord sentiment. We're like with the affordability crisis and all this type of stuff. And as people, you know, like the mayoral election in New York might lead to some really weird outcomes here of like what they're talking about when rent control is the main thing that they're running on, right? So this idea of people that are, I want to talk about active versus passive, but first I want to just talk about this idea of being in a landlord unfriendly environment. Do you play therapist to a lot of people that are doing that and calling JWB?
Yes. And I think even of people transitioning into Florida's market who have maybe had different experiences somewhere else, a lot of it is our team really just being cautious with delivering messages of how things work in our world and in our market, because we can go in maybe unfazed if we're delivering a news like of, oh yeah, you know, we have this going on, but no big deal, when it might have been an extremely big deal to somebody else in a less landlord friendly market.
True.
And that's something that we have to really coach through, is like, I know that you think it's very casual because we can get something done in 3 days here, but that same thing might take 3 years somewhere else.
Yeah.
So when you're calling somebody and talking about it, just being really cautious with the news of like, hi, I am sharing an update with you, and I'm not sure if you've experienced this ever. Tell me about your experience so then I can compare it and make sure that you have all of the information to feel secure about it. But we have that happen a lot. Or on the Vice, where we might say something and someone says, oh my gosh, I have to sell everything. Everything's destroyed now. And we're like, no, not in this market. This is a simple blimp and we will move right on. But we know how to navigate these things.
What are the main kind of like, what are the go-to FAQs about how landlord friendly is Jacksonville specifically? Do you find yourself in similar conversations often of like that happens over there but not here kind of thing?
I think the first thing that comes to my mind is eviction timelines. A lot of that, if you have a renter who's truly just not paying rent and we are going through the eviction process, a lot of our investors are going to come, they personally own their homes and live in non-landlord friendly states. And so maybe in some of those properties that they fell into, or if they had experience in managing those properties that were closest to them, that was their experience, where in some states, maybe that does take you over 3 years to get a non-paying resident out of your home. So when I deliver news that we're filing an eviction and we've started that process, your mind automatically starts going to, okay, let me do the math of no cash coming in for 3 years. And in our head, it's, oh, that is completely not our reality of how that process works. So that's kind of first example that pops up.
Yeah, 3 years of a non-paying.
That's a real example I had with a client who had them going on at the same time, and were able to compare them live, and they were on year 2 when we started the conversation. So we really said, oh, that is an extremely different timeline and expectation. So we were able to have a little U-Pod moment, which is what we'll always do. But also in a lot of states, they can't even give you a timeline because it's just extremely regulated in different ways, where they're like, we don't know. This is we'll let you know when we have something, but it's really out of your property manager's hands completely.
Right.
Yeah,
Okay.
yeah, tough stuff.
So landlord-friendly state. What was the other thing? Passive, like active to passive. I think in Michael Santorio's story, I don't remember what the number was that he came to JWB with, but it feels like he's really ramped up his ability to invest and grow his portfolio since he's been here. You want to talk about that?
Yeah, I think that's something that we do see a lot, is people who come to us with a goal or not, where sometimes in like Michael's situation where he had, what was it, nearly 20 years and he acquired 5 properties. Incredible. That's incredible for anyone. But with that same amount of money that he spent with an experienced team, we're able to say, he might come and say, oh, well, I know I want to do the same, or maybe get 6 in 20 years. And then we're able to lay out the plan and all of the resources and strategies and say, we can get you 6 in a year and a half with that same amount of money. There's just so many resources that they're not teaching you that in school. You have to learn it from communities like this of what can I do? What are my plans? Or some people say, I don't know, I really think I could get 3. And then we say, you could get 12 in that same time with the same amount of money. Here are the strategies to get you there. And that is where it's really impactful. And I say my favorite thing about this role is that I get to change people's lives. And that's how I get to do it, is you're able to provide education specific to your market. And it's not just a blanket real estate education. It's, I know this market and I know it really well. And I know our loan products really well and our resources really well. So let's build your plan, and whatever your dream is, let me exceed it. And then send me pictures from Greece. Where you're at.
I love that. Sounds a lot like Bill's, right? Like it's like whether it's knowledge or time, right? Like once you move into the passive strategy, you can really scale because you have a team that can handle all this type of stuff, and you just got to make the right decisions.
Yeah.
The same as being a business owner. Like this is kind of like your own little business, and all of a sudden you found a CEO to go run it for you. JWB is like the CEO of your portfolio.
Yep. And we focus big on an annual performance review. So for all of our clients to connect with their portfolio manager annually to review your complete ROI tool, where you're saying, okay, here's where my returns are at. Here's my plan. What do we want to do in the next 365 days? Like that is what I really want to zoom out on of, okay, what is our strategy? What do we want to do? What do we want to achieve? What else do you have going on in your investment world, in your personal life with your goals, and kind of like just a mini goal planning session where we're really just digging in, going deep, making a plan, and following up with inventory when it makes sense.
I love it. So Michael is an outlier in the sense that he did all this stuff in 2016, or he started with JWB 2016 before we had the show.
Oh yeah.
And all these different kinds of things. But what convinced him, according to the show, was numbers over emotions, right?
Yeah.
Michael's wife, self-described numbers nerd, saw the value in JWB's conservative projections. Even better, the team encouraged front loading, buying properties early to let time do the heavy lifting. They saw the end-to-end management piece after years of DIY headaches, ready to hand over the reins, right? Like what we just talked about. Aligned philosophy. He saw a belief system, focus on long-term wealth, use leverage wisely, build for cash flow when you need it, not just when you buy. And then the track record and transparency, right? He started in 2016, bought 12 properties, 6 with financing, 6 with cash, liked how it underpromised, over-delivered, and then respected the visibility they offered, both the numbers, and he's continued to grow his portfolio. Let's talk about let's go back to that idea of conservative numbers under promising and over delivering, Allie. Like to me, Greg has beaten that into my brain as more than just the core value, just like a strategic advantage. How do you think of the value of under promising and over delivering?
I It's everything. I think that is the core value that I've even taken from this job and applied into every aspect of my life. But I think that's huge is that we talk about it so much with the investment and the numbers, but it also just starts from the core where it is we say one of our core values, and that can be super casual for some companies, but that is our backbone here to where we talk about it every single Tuesday. We call out teammates who lived out an example of under promising and over delivering in their world. We do it through management, even in our direct teammates, and we live it every day. We live it. I was gonna say we breathe it, we eat it, whatever. We do it all. And then we're able to push that into our products, which just makes it so authentic. And it's something that everybody just truly does. It's not even that you believe it, it is just what you do here. And so when we're making any of our evaluations, we're looking at projections. So there are going to be times where that's the opposite and you miss it by a little bit, but because you're going off of projections. But for the most part, we're focusing on that conservativeness and we're going in and we are focusing on an under promise, an OPOD is a lot worse than a UPOD moment.
That's what
UPOD is under promise, over deliver. Yeah.
Okay, I got that.
The UPOD rolls off the tongue a little bit bigger, but
it does.
Honestly, even in a selfish way, it makes my conversations with you a lot easier. I'm selling you this house and I'm not selling you and then never seeing you again. That would be a lot easier, I guess, to fluff the numbers, but I manage to ROI and I manage to the numbers that I set out for you. And that's what I'm consistently looking at over that 10, 20, 30-year spread. Now your numbers aren't going to be there year 2, 3, 4, but when you're looking at it, I want to say, okay, even with our ebbs and flows that are going into it, let's look at it. Where are we at? I set these numbers out, so I want to make sure that I'm holding myself accountable to giving those to you, which is just not a tool that a lot of companies have. So I think that's a really cool piece is that we have something that tracks it and I compare it to what I laid out to you on the front end.
I love it. When it comes to that annual portfolio review, Dean Curry is asking, does a customer reach out to JWB for the annual review or does the portfolio manager schedule it?
It can be a mix of both. We are going to normally we're going to look and say you're due for one this quarter and try to schedule it with you directly. You are always available to schedule it directly through your owner's portal. There's a tab on there that has schedule performance review, and it'll also tell you when your last one was. If you're not even sure, it'll have it and you can schedule it directly with your portfolio manager there. But we try to be as proactive as we can with scheduling them with our team.
Love it. I saw Michael Santos just checking in. Yeah, good to have you, man. Paige Santos is in the house.
Heard your story.
Allie, I think the number one theme I see in all of this, right? Whether it is attachment to a market or it's working with somebody that can get you to a 1031 exchange or it's going passive or it's, like this idea of like, how do you actually scale your portfolio? It feels like the radar for who is under promising and over delivering out here, right? Like the moment that you feel like somebody is over promising on anything, it's probably going to set you up for failure in all of these breakage points that we saw in all of these things.
Yeah.
Right? Like, and that to me is kind of like the main thing that I'm taking out of here. It's if you are a first-time investor that you don't want to, and you want to win on your first investment and not have to, kind of like make up for it on your second investment, like all of like the people that we've explained here, look for the under promise moment for your investment, right? Like look for feeling really confident in being able to hit the thing, I think the way that Greg explains it to me is like be 100% certain that what you're promising you can deliver and fairly confident that you can do better than what you're promising.
Yeah.
Kind of thing, right? And that's going to set you up for success, whether it's like what experience they're promising you, what returns they're promising you, what kind of like real estate, financial engineering mechanics you can like take a hold of. Feels like that's the main thing to like look for.
Yeah, and I think it's how well are you able to fact check what's being told to you? Even on the experience side, that's why we have a handful of clients even available in this group who make themselves available to speak to clients who are contemplating going into this of is it what they're saying they're all about when it comes to the experience side. And then for the numbers, I would just always challenge everyone, how did you get those numbers? Can you share any of your reporting with me? And if the answer is no, that's probably a flag because a lot of companies they're coming up with that number because they track their metrics, or are we leaving out some outliers? What are we doing? How transparent can you be with your numbers?
Unbeknownst to you, that's your last perfect segue, because next week we're bringing back the segment that we like to do, where Greg looks at other people's numbers, other people's performance, and points holes at the data and how they are over-promising and under-delivering. So hope you join us next week. I want to thank the community that was here. I want to really thank the folks that we highlighted today.
Yeah.
Right? Like, we didn't ask you to come on the show, but you've come on the show in the past, sharing your story. We see it over and over here. The ability for others to share their story here is a big reason why people understand that this is all real.
Yes.
And we couldn't do it without you being here, being in the chat, reaching out to people and asking great questions and taking a time out of, the middle of your workday to join us for an hour here and grow this community. So thank you for being here. Before we leave, any piece of advice for anybody, Allie?
I was going to catchphrase, but I don't know if you were asking for an actual piece of advice.
I was going catchphrase too. Last piece of advice, Allie.
Don't be average.
Don't be average. See you next week.